Good evening, all. Uh, as we are not getting a class, so today I thought of explaining you like this at least. So, ratio analysis, which is a part of third unit, and which I have shared you people with the formulas. So here you have got almost like more than 31 formulas are there. So that is the reason I thought better I go for giving you justly about the main important ones, so that it will be easy for you if they are giving in you just short, so that you can be able to complete your task of doing the sums. So ratio analysis. So here the word itself says ratio analysis. So ratio analysis means everything is in the based of a ratio. So we are going to convert everything into a points, a decimal points, and then we will try to find out what is the solution out of it. So the ratio analysis we are making about a company as a whole, isn't it, ma? So when we are doing this, we need to be dividing the things like our balance sheet or our total financial statements are a combination of different things. We have profits, we have expenditures, we have a sales related, we have a stock related data, we have a debtors, creditors, and a fixed investments. Then we have a long term, short term, and the owner's capital. So there are so much of the variations of your financial statements are combined together. So all these things I can't go for making it into a few kind of ratios, and I cannot analysis it. So whatever I hear in the management from the beginning, I'm telling here we will analysis the things so that we can make a best decisions. Means I want to make the best alternative for my business to do in a best way. So that is the reason the ratio analysis. That is the reason it is a very vast, or it is a combination of different kinds of formulas. So how we are going to remember these formulas? The ratio analysis of the total financial statements are being divided into the four different categories. Okay, ma? They are divided into four different categories. So in this one, the first foremost comes is a liquidity ratio. So first foremost thing comes is liquidity ratio. So first foremost is liquidity ratio. So in this liquidity ratio, here itself the name I have given, it is short term ratios. Short term ratios means it is going to, in our balance sheets, what are the short term kind of activities, all the related things of current asset and the current liabilities, we term it as a short term, isn't it? So this is one category. The second one category is solvency, or we call leverage ratio, and it obviously when it is a short term, then it is going to be the other position, that is long term position. So this is going to cover the total long term part of the balance sheet. So this is going to cover the below portion of your balance sheet where is current assets, current liabilities combination, and this one is going to be combination of your the above portion wherein it is going to have the fixed, a total, and as well as on the left side, if you take off the liabilities part, long term liabilities, debentures, bank ODs, or equity share capital, preference share capital, all these combinations. So here these are the two things which are going to be a combination of your balance sheet. So these two part is done. The next third category is your activity ratio, or it is called efficiency ratio, and it is also called asset management ratio. So this is mostly it is going to be covered of your profitabilities. Means mostly we can say it as like a stock related data, or what we are going to, like when if I am selling a goods on a credit basis, so in how many days I can get back my amount, as well as if I'm dealing with creditors, so that related data it is going to be. So these are mostly, you can assume it is the activity, means the operating activity we can term it as. So this is going to be covered with that particular portion. So mostly it is going to be even said to be as a turnover ratios also. And the last bit is profitability ratios. Profitability ratios, when I go with, again the profitability ratios have been subdivided into two parts. One is general profitability, the other one is overall profitability ratios, mainly for investment analysis. Means whether I should go for investing in that or not, that will be divided by these parts. So general profitability means everything, one common profit we will take, and every activity will just simply divide with that particular common factor. So that is called a general profitability, but this one it is going to have the other portions. So means overall, when I have to make any investment decisions in one particular company, I just go for taking this particular part. Now among these total, what will be usually the frequently asked questions or the formulas, I'm going to make you easy for you, so that yeah, I know you don't want to go for by hearting all those things. So few things I'm going to tell you. So in the liquidity ratio, when I go with it, I have few. So as I said, I have given from the first bit a liquidity ratios. So whatever I said, a liquidity ratios, these are the three. In every, almost if the question is asked with the liquid ratios, these are the three common things you are going to do it. If they are giving you find out a liquid ratio, so commonly whether they give a specification or not, you are supposed to do the three things, and these are very easy. Current ratio means current assets divided by current liabilities. That is called as a current ratio. So current assets means, you know it, all the things together we are going to take all the current assets. There is no kind of anything which I should avoid in this one. All the current assets I'm going to take into this one, and as well as all the current liabilities. The next part is quick asset, we call this one, or we can call this one asset test ratio, or also we have a name of liquid ratio. So please remember, quick if they say, or acid if they say, or a liquid they say, this is a formula, that is quick assets by quick liabilities, or else if you don't have a quick liabilities, then current liabilities, anything is fine. So what is a quick assets? Nothing ma. Here current assets are there, we say, where I said all the things I'm going to consider, but here when I say quick assets, I skip two things. What are the two skip things? I'll do it from the current assets, means total of current assets, I'll minus stock and a prepaid expenses. I'll minus what? Stock and a prepaid expenses. And the next one is current liabilities. I said no, quick liabilities. So quick liabilities are nothing but quick liabilities. From this one, I'm going to minus bank OD. So if I don't have a bank OD, then I'll simply take all the current liabilities. So this is one. And the next, absolute liquid. Absolute, the name itself says absolute means immediate. So in this one, we will take cash, bank and short-term investments if we have, or else cash and bank we will take and divided by current liabilities. Now how I have to take, which one is the best, or which one I should assume it is to be ideal. So for this one, you will have take this one as ideal, means 2:1. Current asset should be 2 portion and the current liability should be 1. That is to be ideal ratio. Whereas for the quick, we take 1:1 is the ideal ratio. And this one we take 0.5. This is 0.5 is to 1, or else simply you take it as 1:2. That is also can be set. So 1:2 is said to be as an ideal ratio for this one. Is this fine? So next comes is the solvency ratios. So solvency ratios, among all these are very commonly questioned points. So I'm just making your job to be very simplified now. You have n number of formulas. Among all these formulas, I'm asking you to by heart the things which are very frequently questioned. So in this solvency ratio, the first foremost and the very common every time questioned point is debt and equity ratio. Very simple it is. A debt equity ratio they have set. So in this case, a debt will be on the top and equity will be on the below. So debt and equity means the ratio we are finding out between a long-term debt with its shareholders fund. So the point is equal to long-term debt divided by shareholders fund. So long-term debt means it's nothing but your debentures will be there and any other long-term secured liabilities or long-term secured liabilities will be there. That all combination we will take on the top, and below we will take a shareholders. Please remind it, shareholders fund. I didn't said equity. I just said the formula is going to have shareholders fund. So shareholders means I'll have equity plus preference shareholders plus reserves and surplus. Remember ma, in your ratio analysis, whenever it comes about any kind of a shares fund, the equity, if it is there, along with equity, every time the reserves and surplus will also be called as a equity part only. So here the profits are always a part of a capital, we assume. So never take only equity. Whenever you are talking about a capital is complete only if you consider your reserves and surplus. How many reserves are there? That all we have to add. Like if you have a general reserve, you have a reserve fund, you have a profit and loss account, you have a capital reserve. All these reserves we are going to consider as a part of the capital. Please remind it. Now this is, so what is the ideal ratio here is equal to 2:1. Okay. And the next one, like all the time I tell you, we always should go for taking a loan rather than using our own funds. We should always take a loan because our funds should be always our future security. So that is the reason a 2 should be long term debt and 1 should be our shareholders fund. And the next frequently asked question is proprietary ratio. So proprietary ratio is formula net worth by total assets. Net worth is nothing but same shareholders fund above whatever I have told. So please remember, proprietor ratio is also very frequently asked. Net worth by total assets. So here net worth all the time, the long term how it is on the top and it should be 2. Equally here also my long term liability or whatever the share part is there, that should be more. So here the ideal ratio we assume 5 times should be more here. So net worth divided by total assets. Net worth is nothing but whatever here I said shareholders fund. So or that is the reason I have written shareholders fund shareholders fund divided by total assets. Now coming down to the third frequently asked formula, fixed assets to net worth. This is very easy. Like these are priorly formed and these are like instantly we can say it. So how I should know about it? Sometimes they will ask you the very instant related formulas also. But when they ask you, they give one hint. What is the formula? So that is 2. Fixed assets, you are going to find out a ratio with the net worth itself. So the formula is very simple. Fixed assets will be on the numerator and net worth will be on the denominator. And net worth, just now I said, it is nothing but a shareholders fund, we call it as. So fixed assets means like net values after depreciation divided by shareholders fund. So fixed assets to net worth. So to net worth means this should be on the above and this should come down to the denominator. So like that you will remember. And the ratio, ideal ratio is what? 5:1 means the fixed asset should be 5% more. Next comes a preference dividend coverage ratio. So here what is the point? Preference dividend. So preference dividend, very common point now. Dividend we pay when we are going to pay to the shareholders. We are going to pay after all our expenses are paid, right? There are 2 payments, fixed amount of payments. One is interest, one is dividend. Interest is a one which will be paid as a part of expenses. So that is the reason there is only one difference in the formula between interest coverage ratio. There is one more thing, interest coverage ratio we are going to have it. So interest coverage ratio and dividend coverage ratio, the formula is going to be changing very simple way. So here I said preference dividend. So preference dividend means after all my payments I am going to pay. So that's the reason, and profit after tax we are going to take. Profit after tax divided by the dividend whatever we promised. Like if for example I have 20 lakhs of preference dividend and I have paid around 9% as a dividend for them. So 9 twos are 1,80,000 will be dividend. So that 1,80,000 we are going to take on the denominator, and whatever a profit after tax is there, that we are going to take on the above and we will solve it. Now if by mistake this is also one kind of a question he may ask you, that is interest coverage. So what is the point here? Interest, fixed point interest. So the formula, interest means we will pay before only, fixed cost. Even in the P&L you have studied in the pro forma. We have A, B, C, then I gave E. So F, in that F cost, fixed finance cost, we have read about it. So finance cost means pay before a taxation. So that is the reason the formula just is going to change is profit before tax divided by fixed interest charges. So why we don't give like preference dividend here? I'm not giving any whose interest means, like sometimes it will be secure loan interest, sometimes debentures interest, anything whatever he is giving, that interest charges we are going to take it. Just now I said no, like if it is 20 lakhs 9% you are doing. Now for example, we are having a debentures of 5 lakhs and 8 is a percentage of interest we are paying. So 8 5 is a, it will be 40,000. So that 40,000 we are going to take it here. Is this fine, ma'am? The next third category of this one is called activity ratio or efficiency ratio or assets management ratios, we are going to call it as. So here this is very simple. In every case, activity ratio or this also called as turnover ratios also we are going to assume this one, turnover ratios. So what is mean by turnover? Turnover means it is nothing but very simple, sales. So here mainly three are there which are going to be, and mainly not even three, mainly two. First two are the very important one. Actually in this one four we have it. First two are very important, but if you understand the first one and second one, the third and fourth is also very easy for you. So first one is inventory turnover or stock turnover we are going to call. So inventory turnover or a stock turnover. So how turnover means, I'll said just now, it is going to be something related to the stock turnover or sales or something like that. So when it is a inventory, rather than going with the sales, I go with cost of goods sold, or we also call cost of revenue from operations, divided by average inventory. What is mean by average inventory? Average inventory anachu, average stock we can call it. So average stock is nothing but opening stock plus closing stock divided by 2. That becomes the average. By mistake he is not giving us opening, he only gave a closing. So simply that closing only we will divide it. We need not go for finding any average. If I have opening and a closing, then I go for making an average. But he gave only one value, then simply that I'll divide with a closing stock. Okay. So here cost of goods sold divided by inventory, because it is a stock related Noma. So that is the reason the stock related we always go with cost of goods sold. Please remember this one. Now to this connection we have a B bit in this one. What is this? Is nothing but like this I have found out. But usually I just want to know about within how many days my stock will be converted. So once you get this answer only, you can solve this one into this particular formula. So this is nothing but number of days in a year or number of months in a year divided by whatever the answer you will get, that you will divide by this stock turnover ratio. Number of days divided by stock turnover ratio. Usually he will mention you how many days are working days, number of working days. But if he is not mentioning number of days, simply you can assume 365 days are a very common way we can assume it. Okay, fine. Now the second one is debtors. A debtors means, obviously debtors means to them we will sell the goods, no? So that is the reason net credit sales, annual sales, net credit annual sales divided by debtors we are talking about. So when I talked about inventory or a stock, I said average stock or average inventory. Now I'm talking about a debtor. So that's why very simple. Average total debtors. So if he is giving opening, closing, simply divide and calculate it. Divide opening plus closing divided by 2. Now if he is giving only closing value, simply take it. But one point we have to keep in mind is, in this one, the debtors means it's a combination of debtors with the bills receivable one. That you have to assume very clearly. Here debtors means they are nothing but debtors with the bills receivable. So how, which is ideal means how much more you are getting, that is ideal. In all the cases, how much maximum ratio you are getting, a very good point you are getting, that is the best point for you. Okay, understand. Now if it is talking about a creditor's turnover, creditor, now debtor means sales I said, creditors means what you can know it, that is purchases. So net credit annual purchases divided by, what is the point here? I have credit, so average creditors. But here what just I said, how a debtors is a combination of debtors with bills receivable, a creditors is going to be combination with creditors with bills payable, creditors with bills payable. and average payable period is equal to number of working days in a year divided by whatever the answer you're going to get, that will divide it. So we have one more in this one, which I gave into this point, that is working capital turnover ratio. Usually these last two, most of the cases he will not ask. The first two are very important, but just for a namesake, I'm just you have it already, which I have shared, so I'm just giving out. Whenever he's talking about a working capital, turnovers always will be on the top. So cost of goods sold divided by average working capital. And remember, if in these cases wherever the cost of goods sold is there, if in the a particular question the cost of goods sold information is not there, so in such case simply you can take a sales as a common point. So credit sales e undala vaadu specific ga if is giving you credit sales will apply in the formula. No, he is not mentioning as a separately as a credit sales, then sales will be acting as my point of substituting in the formula. So remember, wherever it is a cost of goods sold and they didn't mention you cost of goods sold, my sales will be acting as point of substituting the values. Is this fine, ma? Now here comes is the profitability ratios. So profitability ratios are again divided into two parts, I said, no. So this will be our last part in the formula. So in this one, first in the profitability ratios and the last ratios, so first we are taking into the general profitability ratios. So general profitability ratios these are very frequently asked questions. ఇంకా వేరేవి ఉన్నాయి, బట్ దీస్ ఆర్ వెరీ ఫ్రీక్వెంట్లీ కంపల్సరీ దే విల్ బి ఆస్క్డ్. అంటే వెన్ దే విల్ బి ఆస్కింగ్, దే విల్ నాట్ సింప్లీ ఆస్క్ యూ tell me about gross profit ratio, or he will be asking only operating profit ratio, you just find it out. No, whenever it is of profitability ratios, these four in a bunch are must to be done. Okay, these four are must to be done. So whenever it is a profitability, a 4 you have to do it, whether they ask or not. If the data is there, you have to simply do it. So first one in this one is gross profit ratio. In everything, the common point is the net sales will be on the below part. So if they are asking gross profit, simply gross profit divided by net sales into 100. If he is asking about operating ratio, operating cost divided by net sales into 100. If he is asking operating profit divided by sales into 100. Net profit, if he is asking a ratio, net profit divided by net sales into 100. For everything, what is the common denominator will take the net sales. Now coming down to the next, this second part, gross profit, you know it very clearly, but what is about operating cost? Operating cost is nothing but the actual activity cost. So cost of goods sold plus operating expenses. What are operating expenses? Nothing but selling and admin expenses. Together we call it operating expenses. So operating cost is nothing but cost of goods sold plus operating expenses, which nothing but are selling and admin expenses. Together we call as operating cost, that divided by sales. Now what is operating profit? Simply 1 minus operating cost, we can find it out. Very simple answer. Now if you want to do it, then operating profit divided by sales. But what is operating cost? It's nothing but sales minus cost of goods sold is called operating profit. And net profit, they will be giving you definitely. Now in this one, we have got one more few profits which I gave in the list of formulas, that is expenses ratio. So whatever the expenses, they will not ask, but justly I'm telling you, whenever they are going to ask you expenses ratio, simply you're going to take particular expenses divided by net sales into 100. And here cash profit ratio, he gave cash profit if they are giving you that. So these two are avoidable. Net profit I have given you already. These two are avoidable, they don't ask it. But in this one more thing will be asked, that is sometimes in most of the cases, not in sometimes, like they will ask you fixed assets turnover, or sometimes total assets turnover. Now turnover, if we mention, remember in every case fixed assets or for turnover, total assets, fixed assets or for total assets turnover, you have to remember, in these case, leaving all the above, in these alone case, whatever the sales will be on the top, divided by if it is a fixed assets or if it is a total assets, we will take. Understand? In all the cases, my sales will be acting as the denominator part. But if they are asking fixed assets turnover, turnover will be on the top. If he is asking fixed assets will be down. If he is asking on total assets, the total assets will be down. So this is also actually in the ratios they doesn't mentioned it, but I said na, in our ratio analysis some of the instant kind of things points also will be there, some formulas will be asked. So this is very commonly asked point. Okay, understand?